Hi, this is Kerry Artek with Wicked Stocks, bringing you the weekly IWM report. That is the Russell 2000 ETF for the week of Monday, July 25th, 2022. Let's take a look at the charts, all weekly bar charts. Just a reminder, we have tested a number of times over the last month and a half or so this long-term support area, which is defined as two levels, really. You've got 164.16, which is a downside 3/8 Fibonacci over 13 years. That A at the far left is the post-financial crisis or the financial crisis 2009 low from 2007, 2008, the Lehman crisis, and also a rising two-thirds speed line that is projected off that March 2020 low that comes in at 166.76 this week. We're still looking at essentially the mid-160s as long-term support, the 164.16 to 166.76 area, able to contain quarterly, quite possibly annual selling pressures. And from here, we can rally back up to B again, the all-time high, potentially by the end of the year. I'm going to show that in a moment. It could take longer. Let's actually zoom in just a little bit and I'll show you the exact same levels, the Fibonacci 164.16 and the rising two-thirds at 166.76. And we still have these descending structures. The inside one we actually tested last week. This week at 181.98. We can fall off from here now, 181.98, potentially back into the mid-160s again. I'll give you the indication for that in a moment. But just know that if we close above 181.98, I think any day this week, but certainly if on Friday, we should next week then test a significant zone of channel resistance that begins at 190.50 and ends at 197.12, both descending at the same rate, and both really representing a range of midterm resistance that, say, if tested over the next few weeks, can contain buying through the third quarter, and from there we could fall back into the mid-160s again. We could fill that wedge out that is in development between really 164.16 and 197.12, 197.12 dropping weekly, 164.16, of course, a static level. And so we could fill that wedge out for several months. If we do close, though, above 197.12, and we're not going to see that this week, but if, say, between now and the end of August we do, that indicates, for me anyway, a good annual low. And we should then, I'm going to say within 3 to 5 months of closing above 197.12, retest or test that 244.46 all-time high from last fall. And that, I think, 3 to 5 months, I think, is realistic. If over the next few weeks, for instance, we close above 197.12. Until then, the 190.50 to 197.12 area is a good zone to either A, liquidate a long position that you until you wait to see what happens above 197.12. Or you could play the short side. As we push into the 190s, you could consider buying 165 out of the money puts that don't expire for at least several months, because the market is then susceptible to falling back into the mid-160s within a month or two of testing the 190s. And inversely, if we close above 197.12, you could consider playing the long side. That could either be fully invested in this instrument, or you could buy out of the money calls, 245 calls that don't expire for at least 6 months. Let's talk downside this week. We do have the high of the move low from about 6 weeks ago at 174.96 this week. That is weekly support, and above which we can, over the next 2 to 3 weeks, push into the 190s, the 190.50 to 197.12 area. But if we were to close this week below 174.96, I think next week we retest 166.76 to 164.16, where once again we can bottom out on a quarterly basis, quite possibly through the rest of the year. But if we do close below 164.16, and I'm showing it here really just sort of on its own, if we close below 164.16 at the end of any week, then I'm looking at this descending channel bottom as an initial target, and that could take the better part of 2 months or so to reach. Could be much sooner depending on volatility, 146.22, which is a moving target, a descending channel bottom, descending at a pretty steep rate. What I really would expect within several months of closing below 164.16 would be this 130.38 long-term rising channel bottom, which includes trade following that 2009 financial crisis low. So that is a significant long-term support structure that, if tested by the end of the year, and once again, it likely would be tested by the end of the year if we close this week below 164.16, the 130.38 rising channel bottom able to contain selling through 2023 and quite possibly much longer than that. But we are a long way from that scenario right now. I'm just painting the bearish picture in the event we do close below 164.16. Right now, it looks to me as if we are likely to push into the 190s, quite possibly this week. If we were to say close any day this week above that 181.98 formation, we actually may well reach 190.50 within the week. The start of a range of resistance up to 197.12, able to contain buying into the fourth quarter, and if settled above, would be an indication of a good annual low with meaningful recovery then anticipated over the following 3 to 5 months back to that 244.46 all-time high. And that is all I have for this week's IWM report. I'll be back next week with another weekly IWM. You have a great week.